We are going to be looking today at two opposing views on Bitcoin. Obviously, we're going to look at the bear view, and then we're going to be looking at what would be the bullish case for Bitcoin, which is, I would say, probably more logical and more balanced. But we're going to go ahead and take a look at that together. And of course, we're going to be looking at what's going on with our positionings. As we get started here, though, first, it looks like the NASDAQ is accelerating out of its breakout. Remember yesterday, we said, oh, we had a break above the trend line, but then it was testing the bottom over here, testing the support. We said that could be a liquidity grab if it breaks down over here. I went ahead and I just showed you what that would look like if you did the one touch over here. And we're breaking above that now. And I would suppose, I don't suppose, I see also at the same time, just something to bring your attention to, some type of like parallel channel that looks, well, let me see. Looks like we're sloping upwards over here. I'm going to come off the bottom towards the top, bring it back down to there. So I could envision a world taking out the local high right over here. We have to watch this area of resistance as well. I'm actually going to leave that in. It's a good little guide for myself. Looks like we peaked above there. We have two touches into here. I think that's where we're going to keep it down. Tomorrow is Nvidia's earnings. And you might be thinking, well, is the market kind of front running what might be some good earnings out of Nvidia? Might that give enough juice for the markets to go ahead and be able to put together a rally? It's kind of amazing. Have you all seen someone posted like the S&P is 2% off its all-time high, and then you look at the pullbacks of some big names like Oracle, like excuse me, forget MicroStrategy, Microsoft, and many others, and they've pulled back anywhere from 15 to over 30%, and that's wild. And is that a sign of the market breaking down, or is it the sign of what is be looked at as a healthy distribution? I'm sorry, a healthy rotation. Obviously, we don't know. We don't have the answers to that, but those are the questions we need to be asking ourselves. I think that it's not Nvidia the market's running off of. It's mostly the Japanese yen. We saw comments out over there that, let me just go ahead and read the comments. Let me find the comments over here. Is we aren't able to continue raising rates. Yen slumps on whatever. They're talking about their whether or not they're going to be able to continue raising rates. Remember, they're locked into like in a pickle. If you play baseball, you know what a pickle is when you're a runner and then like the second baseman has the ball and then you can't run towards him, where you run as far towards him and then you go back to first and they throw the ball back to you're stuck. That's exactly where the Bank of Japan is right now. But we're seeing right now yen obviously continuing here to depreciate on the news, and that might be giving risk a little boost. I go for that is what is happening. Yep, Cabby, great. Tonight, State of the Union. A lot of people talking about, well, you have to keep an eye on what happens with Iran. It looks like, or it seems like, that Iran is saying, well, we don't want to find out. What can we do here? And hopefully there is, hopefully pray for peace. I saw a couple of comments talking about gold. And that's something that I have to take notice of, because whenever I see people, you all have pretty sharp eyes, and you can see the lower high. Is this the complacency? You have the euphoric move up. You all know the Wall Street cheat sheet. Then the shock, and then everyone's like, oh, it's going back to normal. Is this the complacency that's taking place right now? And if so, and if we break down out of here, it looks like obviously a bear flag, a channel. If it breaks down over here, then do we take out this low and move lower? And I mean, can you imagine thinking that 4,000 on gold would be low? What kind of pullback would that be? I think one greater than most people expected. Most people wouldn't expect that we got a 15% pullback. We've already had a 20% intraday or almost intraday pullback on gold. It's been obviously quite volatile. Silver as well over here, trading at 87. Similar situation, similar pattern. Is this the complacency? I look at the industrial use for silver. I look at the amount of silver that is being mined every year. And I think that in this new era that we are moving into, silver is going to rightfully so have a higher premium attached. Whether or not it's the solar panels, whether or not it is the robots, either which way they're coming. The reason I say solar panels is because Elon plans on bringing solar energy to space to go ahead and be able to power all of the compute that he needs, and probably, dole it out to others that are going to need compute. There's a massive sensation for compute. You just simply can't have enough, and it's reliant, obviously, on many factors, but one of them, of course, is energy. So yeah, I remain bullish long term on not just silver, but lots of commodities. So copper, by the way, over here at $6. We know that Stanley Druckenmiller is waiting for the crash before he takes his position. He's really honed in on it. Yeah, well, so of course, well, let's just go back to the engineered of the pullback. Let me continue the conversation. There's no question you saw the CME raise margin requirements on both silver and gold. And yeah, I mean the timing is uncanny, right? They raised margins around the new year. Some people thought that would be enough, and then we went on this massive run after December, and then obviously right around the top they did. And does that shake up some margin positioning? For sure, it shakes up some margin position. Was there also a lot of people seeing silver trading at over 100, taking profits? There were a lot. Some of you guys I know were selling physical silver and rotating that into gold. And it's not just you. I'm sure there was a lot of people doing it. The market had gone very, very euphoric, had gone very far very quickly. Does that mean that manipulation is going to be Look, I think it's a physical story more than a paper story in the end of the day. We know that we've seen the likes of JP Morgan, who was a notorious massive short position on silver, now long on silver. And obviously short time frames are a lot different than where I'm looking over here over the next 3 to 5 years. But yeah, let's see if there's anything we could get out of it over here. And that looks like the bottom end of the channel, right? It looks like that we're in this channel over here. And you know what? If we break out of it to the upside, then yes, new all-time highs will once again be back into the picture. Is this a good place to go ahead and begin to looking for a short position? And what would that look like? Let me go ahead and just dig in over here. And, if I was, as we're into the top of the resistance of that channel, right? Would you be looking for a simple trend line break to initiate position? You could. I don't feel that this market. There's no counter trend trading is good in the sense that you could catch the right side at a turn and very quickly see price cascade the other way. I guess that happened over here, and is a perfect example of it happening. The market, though, there is this underlining sense of this buying pressure, and I'd rather go on the easier side. And do you ever get caught into a river or a stream that all of a sudden you can't swim against it, and that's the current that you want on your side. So I personally, I'd rather be looking at buy impulses over here than sell impulses. However, there's a lot of volatility, and it could work out in both ways. Yeah, that's the way I see it. Platinum, I don't follow platinum. Let's go ahead and just see if I could get, if someone has a better symbol for me. Here we go, platinum. There we want. Similar situation in so much as that you had the euphoric blow up top. There seems to be a less of a bid over here. And yeah. So if you're interested in shorting, I would be looking for I would deem what would appears to me to be relative weakness over the strength. But I don't think this is the sector that you want to be shorting. And I think that if we run into any corrections, and corrections mean taking out that low that we saw on all three of them from the February, for me that would be like, okay, this is a place to begin long-term accumulation, because I don't think the wave that we just saw is like the all-time high for either any of these. And what type of time frame though? I'm talking long time frame now. By the way, we were talking yesterday about, or the day, I'm sorry, earlier, oil over here. It looks like that it is, we're watching the top of resistance also. This is something on any type of deal with Iran that would likely come back very quickly and be testing once again into the bottom area of support. So that seems like something for the speculators out there to be watching out over there for. Um, I am green. What is green? We haven't seen green in a minute. I was pointing out to you an investment that I have taken in this high yield dividend block, and explaining it to you last week. And look, like, I don't know if I didn't cover the risks or not, but there are major risks, especially with all these high dividend yield products. And that obviously is NAV decay. Like, talk to an LLM, talk to Grok, talk to Claude, talk to ChatGPT, talk to all of them and say, listen, so far, how is the NAV decay holding up? What are your thoughts? What are the risks? Because there are risks, and the risk that I foresee would be like, so far the NAV has held up extremely well, and it seems like an excellent product. And I think that this is going to outperform Bitcoin on the downside. It's outperforming with the total return we looked at. On the upside, it's outperforming. And I do believe that in a prolonged bear market, right? Prolonged would be over the next 6 months. Like, people, 4-year cycle enthusiasts would have Bitcoin bottoming somewhere around probably October through December of this year. And that would be best case scenario also. You never know what could happen. And we'll look at, the bear case right now, and what's a little different, you know? Is this time different? For both sides, it eventually will be different. There's no question. And I think that in a prolonged bear market, that like, I know in taking an investment that I also plan on, if I were to see prices lower, absolutely DCAing in, because I believe in the long term viability of the space. And I think that, it's going to work out well. But please look at that from the lens of what is the risk. There is no, well, anyway. By the way, just jumping in over the 10-year, and you could see it once again here, flirting with what could be a really big breakdown. I think Ray Dalio was saying, like, in his whole, like, hoopla, and maybe I'm wrong here. Maybe I'm tainted by Ray telling everyone to buy China in 2021. But, maybe it's his, like, oh, I like Bitcoin, I don't like Bitcoin. But most importantly, I think that Ray is saying, like, basically sell bonds. I don't know that that's a good decision. If we get this technical breakdown, it looks like this might be the whole, what will be known as the AI deflationary trade. Watch that. That's what I'm watching over here, at least. Let me jump back over here and get into, yeah, that's if it does, what a gift. I, if it does, and it gives those that are interested in the ability to go ahead to continue to go ahead and dollar cost average, what an amazing opportunity. And for me, that would be looking for the opportunity to go ahead and continue to take a bigger position into this. So, may or may not happen, but let's look at that from a couple of different lenses. Before we do, obviously, we're only holding, as far as stocks are concerned, we're only holding Nvidia. It is ahead of its earnings tomorrow after the bell, and I imagine that we're going to see volatility. You can see over here coming into the trade right now, holding barely into profit, 3%. It's after the bell, which means that any stop you have in place will not be respected on the open, whether it gaps up, gaps down, or whatever have you. So please be aware of that. Yeah. For those who are looking to accumulate, it is a gift. For those who have a position, for example, in block, it pays a weekly dividend that you could continue DCAing into that position throughout that time as well. Yeah, I like, could Bitcoin make new all-time highs before October this year? Absolutely. We have to hold this area over here. That might mean one more sweep of a low. It might not. By the way, let me just finish over here with equity so we could get into Bitcoin, which I want to get into Bitcoin. And let me just bring up MicroStrategy first. MicroStrategy has just been obviously one of the greatest Ethereum and MicroStrategy, the best trading pairs of last year with this volatility. On the upside alone, it was fantastic in 2025. On the downside, it was also tremendous. And I wanted to just like in the spirit of the high yield dividends, I want to just bring in one more potential nugget. By the way, Brownie Brown, if you're listening and appreciate all of the core spirit you're bringing into the situation here, your work on Nvidia, looking at what could probably be better, your request for some MAs to go ahead and dig further. We have, and soon we'll have across all our equity pairs, some really good foundational starting point for you. Heyu is working on that. We will get it out to you inside core, and then we will continue from there. I just want to bring in this to the conversation, which made me think of that. This is winter. Winter is a high yield dividend. Let me go ahead and just jump back over here as I go into there. So I think I have it up over here. I added winter. We were looking at block versus IBIT versus STRK, and I added winter in. Now, granted, I'm picking this from a point where we saw Bitcoin peak. So, oh, that's not from where Bitcoin peaks over here. Let me go to where Bitcoin peaks. This is where I want to start this little exercise off of. And let's just start over here. So you see block is down overall 38%, IBIT down 47%. This is the past 4 months now. STRK holding up the best over here compared to the other two, down 15%. And winter, which is an inverse, I'll say, short option income strategy on MSTR, is up 82%. Now, winter pays an expected dividend of 70% a year. So don't really look for any upside NAV and be very careful if strategy does some type of strategy things like this. I look at the price of winter getting wrecked over here, right? But I wonder, here's what I wonder and where I bring to the conversation. If out of strategy, when, we're long strategy, when we're on the sidelines, I wonder if it makes sense to kind of take a position in winter, WNTR, I should call it. And, granted, this is only 30 days over here, but 30 days is probably something like 7-8% in collection. Here, over here, you could see, I think this would be a losing trade. You're collecting the yield, but the price of winter from entry to where we exit, you lose a little bit for sure. Exiting once again, this would have been bombastic, but it's a major bear market in strategy. So I don't know. But on NAV, as well as the collection of the yield over here, you're talking about a gain of about 40-50%. Now we almost did that over here trading, so I'm not so sure. over here in the long run. You know, it looks like, I don't know. I'm interested in kind of playing with it and seeing if that might be something in the future that, I mean, the volatility of strategy, it could. So I like it. So I'm interested in it. And then if anyone a lot smarter than me is able to go ahead and figure out a way, well, you know what, Jord? Um, Maybe what the thing to do is find a way to go ahead and use winter to kind of hedge block. And that's not now, right? That wouldn't be now because obviously strategy has been getting absolutely annihilated. But you never know. Riot has a strong buy rating with a 43 price target. They secured $1 billion deal last month, going off the previous Riot conversation. Riot, Iron also, I mean, Iron looks hot. What's your feeling, Joseph? Iron versus Riot, and as well as have these moves towards providing compute for these hyperscalers already been priced in or not? Are they going to be able to scale? I don't know. Usually, I don't know if it's late or not. Jumping back over and getting into the Bitcoin. Let's take a look. Just some new things, exciting things to think about. Before we do that, obviously, we know that we're continuing. Short Ethereum here, 42% open unrealized gains. Short on Cardano over here, 4%. Solana, Bitcoin remain here out on the sidelines. Those that are trading on the buy side only, loving life. Loving life. You know what the satisfaction of preserving purchasing power is? Do you know? Loving life. And anyway, but watch Ethereum. It looks like that it could be the closest one to targeting entry. Bitcoin here is turning around also. So watch over here. We will be watching as they want move towards kicking off some entries. Let's look at here at Bitcoin, and Bitcoin's trading at $64,000. We are seeing in a similar fashion what our expectations were as monetary base. Guys, how wrong was the M2 crowd? How terribly wrong. And we were there last summer just to point out the incredible flaw in their whole analysis. But M1, that's my thesis over here, monetary base total. And we are seeing now as the Fed stops QT and begins running the balance sheet up, the turn. And expectations are that equities should feel the love first, and then we should see Bitcoin and crypto find their footing and put in what I think will be the low until the peak of the cycle. I know a lot of people think that we're in the midst of a bear market. Hey, Bitcoin's off 55%. It could get a lot worse from here. So we'll find out whether or not this analyst is correct. This thesis is correct. We do know that in the previous episode back in September through November 2019, when we were in the same part of the cycle, Bitcoin not only made a lower low, which it has, it then swept those lows another time or two. If you go into the daily over here, let's just go back to that place over here in 2019, and then you see Bitcoin on the move up. We already saw that. The leg down. This leg down seems a lot bigger, but it could be because of the price. 12% leg down. I want to find out what this one was. And then, yeah, it took it out one more time. It swept the low, and then that was the low until the alien invasion. Until the global lockdowns. And then over here, I just want to see the difference because it seems a lot bigger indeed. Instead of 12%, 26%. Major leg down. No doubt about it. So bringing it back over, and we are testing is what I thought would only happen in a liquidity crisis. I don't think we're in a liquidity crisis. It was enough that the Fed needed to stop QT and begin running that balance sheet up. But I don't think that this is any type of crisis situation. They are evident Maybe there's something happening behind the scenes that I'm not aware of. What's interesting though is that throughout this period, equities responded much quicker last time, and we have seen a lot of not a damage in the overall indexes, but we saw a lot of damage in some front running names, which is very, very interesting. And I would like to take a comparison of them. A lot of them, I think, deserve it. Like um, Microsoft, for example. Like, I mean, if OpenAI succeeds, they're going to be all right. But if OpenAI doesn't succeed, man, they're going to feel it really, really, really bad. Jumping back over and just looking at the state of the situation we're in, we have an underbelly over here, highly aggressive, but would be the first opportunity for a turn. It looks to me, I pointed out yesterday, we are seeing what looks like the signs of a wedge developing. This could be where we see a relief rally, whether or not that relief rally puts in any type of bottom, meaning that we then, get back to feeling a little bit of honeymoon feeling over there, or it winds up being a lower low remains to be seen. We know that back in the summer of 2021, we saw this pattern develop. It broke out and then swept the low before ultimately bounce into new all-time highs. Just to watch out for it. We have over here North Star, and he's pointing out that falling, this is looking at a monthly chart. Okay, looking at the close only on the monthly chart, falling below 60K would cause major structural damage and could lead to a much lower low. A strong bounce is essential here. First of all, he's got the previous all-time highs. I don't think much of if we trade below the previous bull cycle. It's happened before. It happened, I mean, he's using a monthly chart. It's a little different. We all know we traded below the previous cycle high, which is what helped us mark out for good reason what was going to be the low. And I think we have a chart over here from Vaca now. I'm gonna go to next, but let me continue here. So right now we're into a pretty nice point in so much as that on the monthly chart using closing only, right? You could see that we are into support, and that you could see that marked out that support is from the previous or from this 2021 uh, uh resistance turn support. So this is an area that we want to hold if we're going to uh, get out of this one unscathed. Now I look at this from my perspective, and I see some structural damage is done. We saw the structural damage, by the way, the major structural damage, all the way up over here at 89,000. And the reason that it was structural damage, and we talked about it, and I said to you, even though price is making a higher high than April at the time over here when we were 89,000, I said for me structurally, it's making a lower low, and I pointed out the reason. This was the Japanese yen unwind. I'm sorry, this was the ETF launch shakeout. This was the Japanese yen unwind. And when we traded below that, I said, I get that price is still higher than April, but structurally, that's a breakdown. We then never were able to make the meaningful repair, which was above that line again, and then wound up making a major low down. If we are putting in a bottom, a near-term bottom, a longer-term bottom, obviously this means that it's up for debate whether or not that low gets tested or not, right? We don't it's being tested right now. So I see some major structural damage already in play. And then if you look at the orange line over here, again, this is the global lockdowns. Since 2017, we have not traded below this structure, and now we're not only trading below it, we've retested it and are looking now to see if we resume down. So I already see structural damage, and you know, for that to be repaired, obviously we need a buy impulse. and a buy impulse is pretty far away at this point. So a relief rally breaking out of what we talked about, what it looks like a wedge to me. You know, I would not get excited. I would probably buy side boost on Bitcoin would be going long. I think so. But I would not have any hopes up, and I would think that there's a good chance that we see a repeat of what we saw in 2022, where 2021, where right over here, you have the breakout from the underbelly, get excited, boom, take out the low, then form the bottom. This is a bottom being formed over a period of a few months, and then that bigger wedge was enough to take us to an all-time highs. Could a similar situation be playing out? We'll watch for it. We'll find out if that is watching uh, something like that is developing. In hindsight, I should have, because we were watching this structure here, and well, it was bigger than anticipated, the damage, when we talked about that major de-risking event. So in hindsight, that would well, there you go. The breakdown, you saw the retest, and then on the resumption down. Look at that. We still are maintaining that previous cycle high, and we mapped that out a long time ago. We were like, no, it's not just down over here. And we talked about how this is where that high was established. This is in the range. So the bulls have a thread. I think the bear case, largely, I think the bear case is that, well, the 4-year cycle suggests that the bull market and the bear market should be a lot of noise. Yeah, look, I can't do anything to help you because, you know, you're like, I'm so sorry. If you think anything is noise, all you're saying is that you haven't been here and you don't understand what's going on. But when you don't understand something that's going on, that's not noise. But I do think you're noise. You know what? I think that you're a lot of noise. So, checkmate though is giving a counter perspective. So I wouldn't say North Star is, let's say, giving the bearish case. He's given a caution. That caution should be listened to, in so much as that, even though it's a monthly chart, high time frame, you would have to say that, you know what, that would be a trend line break, and closing below it, it could lead to a significant further downside. I think a lot of people are already prepared for what could be a traditional bear market downside. So I don't know that would be a big deal, but there seems to be a lot of buyers lined up in these current areas that we're in. Let's go ahead and check out what Checkmate has to say. Every mean reversion model, from a technical to on-chain, is trading within bottom formation levels. Typically seen, by the way, you've seen the RSI, right? The most oversold it has ever been. I mean, a bounce makes sense, but sometimes, as we saw on gold these past 12 months, gold has now been overbought on the RSI for 12 months. It is quite possible. Oops. Sorry. It's quite possible that what we saw on gold, looking on the monthly chart, and if you're not familiar, let's go ahead and just pop it up over here so we could see this should be gold right over here, and then you're looking over here on the monthly chart. Boom, 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 boom. I mean, most people are like, oh, gold's overbought, time to sell. And gold has been since last March. So going on 11 months now of overbought. Could something like that happen on Bitcoin? On the other side, though, could happen. Is it obviously not what I believe is going to happen, but it could happen. Let's see, both sell-offs so he says that the last time we saw the price capitulation event was December 2018 and June 2022. By the way, June 2022 was not the bottom. It was the bottom for Ethereum, but gold did not bottom out into a few months later as we move towards November, December. Both sell-offs in November and February are in the Hall of Fame of realized loss on chain. It's not the biggest in relative terms, but the biggest in US. So the biggest in US dollar terms is a little bit irrelevant in so much as that the higher price goes, it's obviously always going to be bigger. So we'll just leave that off there. We're in the bottom 20% of the most conservative and bottom 5% of the most aggressive deviations from any sane anchor model. So here, even a bounce here would just make sense as far as a positive reversion to the mean. Either Bitcoin is dead, will no longer mean revert, and all your models are broken, or you should be ignoring the bears, staying very humble and quietly DCA and stacking stats from here on. Absolutely. This seems like we've hit over here. If you remember what is where I believed was over here, this is the stacking zone. We're now trading below it. And for as long as we're below it, for me, is an opportunity to be able to lean in. Price print is largely behind us. You know, if things don't get from bad to worse, if the 4-year cycle theory continues to play out, then there's a lot more pain ahead. So, you know, one never knows. Thank God we don't need to know, in so much as that we only know what side to be in, when to be in the market, and when out. But there could be another, obviously, from where we are today, if you saw 4-year cycle behavior playing out, another 40% plus drawdown from where we are over the next 6 months. We often experience retest of the lows happening right now, leaky price charts, powerful rallies, and then lower lows. That's what we just talked about if we get that breakout from the little wedge we're in, and then take out the low again, with the final capitulation event to book the end of time. So there you go. That's being described here very well by Checkmate. In my view, even this though sounds horrific, it's unlikely we have anywhere near the aggressive rate of decline nor depth of decline as it already occurred from November 25th to February 25th, where we are now. The hard part is most likely behind us. The difference between what happens though if? It's just something to think about. What happens if we were to see, you know, S&P not off 2% of its highs, as some of these big names are down 15 to 30% plus? What happens if the S&P comes off 12%, 9%, right? And some of these big names are down significantly more. What is Bitcoin doing in that scenario? There's no rush, but these Bitcoin prices are temporary. You know, I would say temporary, like look for that to be over, you know, could be another couple of months, but yes, temporary. How temporary, we don't know. It's tremendously oversold, very balanced analysts. And there are few statistics I'm aware of that suggest otherwise. The bears will spend the next few months liquidating their churn accounts, trying to short the bottom. I don't know, of a painfully, maybe, or those that are late, of a chop consolidation range. The bulls will do the same by getting too hopeful at the range highs. Again, if we break out of that wedge, or if we get an entry on the buy side, we're going to take it, but we're going to take it expecting it to get stopped out, right? No hopium here. Just make sure we execute and stay on the right side. Investing is a game of picking great assets, accumulating at low prices, and then being patient. The 20-week MA is at $58.5 thousand Bitcoin, just above 55,000 Bitcoin is cheap. A mere B's below the 60K low we already set. There's a lot of folks out there who want to haggle over the missing 3%. The realized price is at 55K. Bitcoin is cheap, which from first principles should stop being visited over time. How's that for intuition on CTM's part? That's amazing, right? As it deviates due to unrealized profit in lost coins, this is the time to stay humble, stack sats, Checkmate bringing a balanced view to where we are and saying, and you can see over here, look over here, when we came down in 2022, came down towards these levels, where I would say it's more appropriate here. It took a few months in order to go ahead and put that bottom in. Wouldn't be surprised if that's what happened this time at all, nor would I be surprised if that didn't what happened. So, I guess the moral of the story here is, by the way, power law floors, I have the prices in here, have now broken what they thought was the support price over here in 2026, 74,000. We are trading below that area. And is this time different? Well, I see some differences over here. But I do believe that we are in an area over here that well, it pays to be balanced and don't get too wrapped up in what happens next, but rather be patient. Make sure you execute. Buy side could trigger very quickly over here. Watch Ethereum first. Bitcoin is not too far behind. And if we get those buy trades over here, we're just gonna hang in and wait. We're not gonna get too excited. We're just gonna continue executing. Anyone that's been here executing over the last 2 months sees the fruit. Anyone that was executed 2025 when they thought, we're underperforming, buy and hold doesn't make any sense, had an enormous wake up call and now understand. So we are moving from an area across Bitcoin major downtrend. Now it looks like it's trying to consolidate here. Could be another leg down. We could be close to putting in what could be viewed as a bottom before we move towards a cycle high. Or we look at equities and we say, wow, we've gone through a major consolidation over the 2025. Yeah, either we're getting ready to really move up powerfully or likely down. But this range that we've been in is most likely coming to an end. I think volatility is going to pick up tremendously this year, and I hope that we are there to capture it together. No, we don't buy and sell the cycles. That's not what we do. We buy and sell momentum and absolutely crush what anyone could do selling in a cycle. So I was right. You'll figure it out. A lot of people figure it out the hard way. I hope that's not you. But everyone, I'll see you all tomorrow. God bless you. Have a beautiful day, everyone. I'll see you back on the inside.